Welcome to Learn Accounting Podcast by me, Professor Accounting. This is episode 4, Bank Reconciliation, Balancing the Checkbook. Let's start with an overview of the topic. What is bank reconciliation all about? In short, it compares bank statements with the cash book. So why do we perform this task? Just briefly, some 3 key points. Firstly, it's for verification. We're answering the question, do we have in the bank account what the cash book says? So remember that the cash book is an internal business document. It outlines the receipts and payments made during an accounting period, and we want to confirm what our records state happened and during the period, and what our bank balance, we think our bank balance is compared to what the bank says our bank balance is. Why do we do that? Well, to prevent fraud, so obviously to stop maybe people stealing money in some way, and obviously if it is going on, then we need to detect fraud. So we need to know that it is happening. So example there is theft occurring by staff. So staff stealing checks, is staff stealing actual cash, money, and so on. Rather than particularly looking at one example of detecting fraud, we generally in accounting we have to try and minimise errors. So we want to know they're happening. So I could put there to prevent errors, but obviously human errors is inevitable, it happens. To detect errors is our main goal, to know it's happening and try and correct it. So examples there could be our checks dishonoured, so maybe we don't know it, but maybe we've sent a cheque to a creditor to make payment for our liabilities, maybe our suppliers, and unfortunately we didn't have enough money in our account at the time the cheque was cashed. So we need to know that cheque has bounced, and that we still owe that money to the suppliers. And likewise, debtors might pay us money by cheque, and they may not have enough money or sufficient money, or there could be other reasons why checks bounce. Dates on checks might be an issue, the cheque might not have been signed correctly, and so on. So if any checks at all are being dishonoured, it's going to affect the balances between the cash book and the bank statement. Lastly there as well, are payments and receipts missing? So did transactions that have occurred, were they recorded, or were they not recorded? So if a transaction has taken place and a payment or a receipt has been missing, then that is going to give an imbalance between the bank account value of bank money and what we say we have in our bank. Okay, so that's a quick overview there, short overview as to why we perform this topic. Let's look a bit more detail about some of the key terms and answering reasons why balances may disagree. So the reasons why you might get disagreement, you tend to always get a disagreement, mainly because of timing differences. We'll come on to that in a moment. Key terms. Let's start off with important notes. I've put take notes there. Unpresented checks. I'm sure you're familiar with that phrase. Maybe you don't know what it means, so I'll go through that. But you need to know, obviously, what unpresented checks means. And secondly, there's 2 definitions for this: outstanding and uncredited lodgements. So you may have seen them. Let's go through what they mean. So keywords. Number 1, what is an unpresented check, or in multiples, unpresented checks mean? These are checks that are completed by business, but they're not yet presented for payment by the supplier through their bank account. So an unpresented check, it means that a business, us as a business, we're looking at our records here. Our cash book, bank column, has been credited because we're completing a check to pay off a liability. So the double entry for making a payment to a supplier, obviously what was previously on credit, would be debit the supplier account, reduce liabilities, and credit the cash book in the bank column. That's what's happening. But the effect of that is our bank account, actual bank account, the real bank account at the bank, is not going to change at all until the supplier takes the check to the bank to deposit it and to clear the funds. So until the supplier takes that check to the bank, our cash book has been decreased because we raised the check, but the bank account still remains whatever it is, obviously higher, in isolation with that transaction looking at only, until the supplier takes the check to the bank. So that it means by an unpresented check. Let's look at the outstanding or uncredited lodgements. This is in some way the opposite, if you wish, it looking at a different side. Outstanding lodgement. Lodgement generally, just in this case, best way of understanding lodgements is it just means an entry, it means a record. So think of a bank statement with in the date, the details, and the amount. It's just an entry. One of those lines is like a lodgement. So this is number 2. This is cash or checks paid into our bank account that has not yet been recorded on the bank statement. Okay, so this is money we've received and it's gone into our bank account, it's gone into our cash book, so we've recorded it in our cash book entry, it's actually gone in the bank as well, all wonderful. However, the bank statement hasn't got a record of it yet because of the timing differences between processing that deposit made and the printing time and the delivery time of a bank statement. So at the time a business will complete this task of bank reconciliation, they're looking at a bank statement, and they don't know that although money has been paid into the bank, they don't know that because it's not on the bank statement. So that is an example of timing difference. But the only indication they would ever have if a debtor has told them that they've made a payment to the business, or even maybe someone else who owes money for other revenue. But we can only go by what is on the bank statement. So there's a difference between what we've recorded in our cash book and what is actually on the bank statement. There'd be a timing difference there. So that is an uncredited or an outstanding lodgement. Let's look at the layout. You need to learn the Proforma. This is the most popular one. You can just reverse it as well. You can start with bank balance as per the bank statement, but this tends to be the one we use. Always put a title in your answer. This one actually is more applicable to AQA. So bank reconciliation title. We start with the balance as per the cash, and we're trying to get all the way down to the balance as per the bank statement. So what I'm going to do on this slide is just show you 2 transactions and just show you the language they use. It's pretty straightforward. More detail on the next slide. So balance as per the cash book, here's a value, 2440. Here's a transaction. So a cheque payment of £500 for telephone expenses has been entered into the cash book, but is not yet presented in the bank. So I underline the language there. That clearly indicates an unpresented cheque, so that would go here. I'll explain shortly the add and deduct and why we do that on the next slide. Next transaction, let's look at cheque. So a cheque for £20 was received for rent received, so we're renting out part of our business. This has been paid into the bank and has been entered in the cash book, so that's good. Both have been done. However, the transaction isn't showing on the bank statement. So that, again, the language there, that indicates an uncredited lodgement. And I think I've adapted these from one of the papers, and it can be as straightforward as interpreting the language like that. Not always, but this is a start, this is an overview. So the 125 is the uncredited lodgements. Now, to get the balance as per the bank statement, well, naturally you would have that value on the bank statement that you're looking at. But just for this little demonstration, if we just do the maths, we add the 500, take off the 125, and we get a value of 2815. And I'm going to show you a little different way, same example, but different way of approaching this in terms of a question. So we've gone from bank balance as per our records of 2440, and we've compared that value to the bank statement, and the bank statement has indicated a higher value. So we've had to find a difference from 2440 to 2815, which is a difference of £375. And that difference of £375 is due to an unpresented cheque of £500 and an uncredited lodgement of 125. So let's look at that in a slightly different way, just on the next slide here. Last slide. It's coming up now. Okay, so there's the values again. The balance as per the cash book is lower than the balance as per the bank statement. So we want to account for the difference of £375. Let's start off by the unpresented cheques. So the rule for unpresented cheques, as we've just mentioned in the previous slides, unpresented cheques, they show a higher bank balance recorded on the bank statement than what the cash book states. Now, that is true. That will always be the case. But don't just think that's obvious because looking at the red numbers there, the bank balance is higher than the cash book balance. You could easily get a question where the bank statement, balance as per the bank statement, is actually lower than what the cash book says. So unpresented cheques, the effect of that shows a higher bank balance recorded on the bank statement than what the cash book states. And let's look at our example. We had, as we've just had, a £500 unpresented cheque. So let's think what that means. £500 unpresented cheque. This, when the cheque was drawn, it was produced, we reduced the cash book, and because we're paying it to a supplier, a creditor, we've decreased liabilities. But let's just look at the cash book. The cash book was deducted. So if we have a balance of 2440 now, then £500 has already been taken out from the cash book. Okay, so if £500 is has already been taken away from the 2440, then £500 is not yet being taken from the bank balance of 2815 because it's unpresented. So you've got one of these values, one of these, the cash book or the bank statement, one of them being affected, and the other one isn't affected until some point in the future when the cheque is cashed by the creditor. So to compensate, to clarify, to see if there's any discrepancy or error, we have to, in this case, add back to the cash book balance. We add back to the cash balance what we took off previously. So because the 2815 in the bank statement hasn't been affected by that unpresented cheque, and the cash book has been affected, we have to compare like for like. So the 2440 has to be inflated by the £500 so we can compare like for like. So we add back the £500. So the effect there is any unpresented checks that occur, you could have one, you could have three, whatever, then they're added back to the balance as per the cash book. That's the rule. Let's look at the outstanding uncredited lodgements. So these are amounts not recorded on the bank statement. Okay, so let's look at the effect of this. This was £125. So the £125 was recorded in the cash book. Okay, so this is receiving money, remember. So the cash book was debited. So that has, when it was recorded, has increased the cash book to then give a balance of 2440. I mean, exclude the £500 for the moment here. The effect of the 125 has increased the balance as per the cash book. So it's included in the cash book balance there of 2440. However, £125 has been paid into the bank account, so we're told so, but it takes time for it to appear on the bank statement. So there's that timing difference, isn't there? So we must remove from the cash book balance the 125. So we're looking at the cash book. So because it was recorded in the cash book and it's actually not on the bank statement, it's in the bank balance, but it's not in the bank statement, we've got a situation where you're looking at your bank statement, it's not on there, but it is actually in your cash book. So you've got to make them like for like again. So you take it away from the cash book balance. So as we said there, we must remove from the cash book balance to check if the amounts agree. Now in the brackets that I've just done a kind of a running total as to what we're doing at each point. So we've got a situation there, maths can work with this. We start with the 440, which is the balance as per the cash book. We're adding the unpresented checks and we're taking away the outstanding or uncredited lodgements. And if we net them off, obviously the full amounts, the three numbers there, we do get a difference of 375, which we can work out originally, which I mentioned before. So if you do, typically if you're given a question where you've got balance as per the cash book and you've got the balance as per the bank statement, take the difference away and then you can see 375 in this case is to be accounted for. And we have accounted for that in this short example with the £500 added, and a minus of 125. That would net off to give 375. So at that point, bank reconciliation, the bank has been reconciled, and that's the topic. Well, I want to thank you for stopping by and watching this podcast. Again, my email address there, and obviously using student rooms, get many requests through student rooms. And again, everyone's welcome to watch these clips. More to come on YouTube. Thank you.